Welcome back, everybody. This is part 5 of my Tesla 4Q 2024 financial review. On this chart, you see the total revenue development of Tesla's third most important segment. That's the service and other segment. You can see how this segment grew 31% year on year in fourth quarter and 2% sequentially, for a total of 10.5 billion in 2024, and it's a healthy 27% growth rate year on year. The service and other segment is primarily driven by Tesla's continuously growing global fleet size, because the primary revenue driver of that segment is sales of used vehicles. The second one is providing non-warranty after-sales vehicle services. Then also body and parts is another big driver. However, this is an opportunity where Tesla can significantly grow, because in many countries Tesla has entirely outsourced collision repair to certified third parties. There's a revenue capture opportunity embedded here. This segment also includes all the paid supercharging sessions globally, all the vehicle insurance revenue, the premiums customers pay for the insurance, and then last but not least, retail merchandise. Big picture, this segment is nicely growing on a top line. However, the downside of this, or the negative part of this business, is it's a relatively low margin, and that's why its earnings contribution is relatively low despite the meaningful revenue size. So this brings us to the end of the revenue discussion. We went through all the auto revenue components, energy generation and storage segment component, and the services and other segment components. And now we get to sort of the meat of the matter, and we get to total gross profit. But first of all, what is total gross profit? Gross profit is what's left after you paid for the cost of your revenue. That doesn't mean you paid for research and development, because that's not cost of your revenue. You haven't paid for selling, general and administrative expenses, and you haven't paid for various other things. So gross profit tells you if it's a profit, first of all, and not a gross loss. If you scale your business to a large enough degree, you can make a profit. But as long as you're gross loss making, no matter how many units you will sell, you will always make losses. So that's the first key thing about gross profit. And so gross profit is far from being profit, even though the name suggests otherwise, because you still have to pay for operating expenses, which include R&D and SG&A and some other items. And the first meaningful profit metric is really operating profit. And you can see here in this breakdown that even between operating profit and profit before tax, there are various other items that can make a significant impact. And this is actually the case in Tesla's case. And then you still have to pay taxes, and then you get to total net income. In Tesla's case, there's something called non-controlling interest that a lot of companies have. There's a small deduction, and then you get to shareholders' net income, which is one of the most important metrics. Not the most important, in my opinion. The most important metric is free cash flow, but we'll discuss this later in more detail. And when we now look at the total gross profit development in Tesla, in the fourth quarter, you can see there was a significant reduction. Sequentially, gross profit came down 16%, 6% year on year, to just under 4.2 billion, with total gross profit for the full year 2024 down 1.2% to 17.4 billion. Given what happened in the global auto industry, etc., this is actually a pretty decent result, I'd say. And then when we look at sort of the long-term development, you can see that Tesla's peak gross profit was achieved in 2022 at just under 21 billion. And it was a year where gross profit also grew at an insane rate, 53%. This already gives you some idea of the issues in the global auto industry. Just one word on 2022. I consider 2022 a complete outlier year for the entire global auto industry. The auto industry generated some, what I would call, windfall profits due to some market conditions that were created by COVID. This then enabled significant cash generation by companies, which then ultimately led to various share buybacks that kicked off in 2023 and continued on into 2024 even. However, this situation is unsustainable as free cash flows in the global auto industry have significantly decreased now. So on this chart, we also look at total gross profit, but this time we break it down into the different segments. Also split out FSD subscriptions. This is still not a needle mover. You can see that the auto business decreased over 11% in 2024 to 40.2 billion from 16 billion a year prior, and from over 20 billion in 2022. Meanwhile, the energy generation and storage segments grew from 2022 just 0.3 billion to now 2.6 billion. So it's nicely growing, and the services and other business went also from a very small contribution of just 2.2 billion to now 0.6 billion. Still not a huge needle mover, but also at least nicely growing. And subscriptions, FSD subscriptions, currently not a needle mover, but I expect this to change quite significantly very soon, based on the performance improvements that we have seen in Tesla's FSD. Then on this slide, we look at gross profit from a slightly different angle. Here we are focusing on automotive gross profit, and we look on vehicle profitability, and you can see that the fourth quarter of 2024 saw a major sequential decrease year on year, down 21%. From third quarter down 24%, and as we discussed previously, this was primarily driven by significant inventory discounts, but also by Tesla's subsidization of financing rates and some other unit profitability negative effects. And when you look at this long-term trend, Tesla managed to maintain vehicle profitability for quite some time, just over $8,000 per vehicle. And then you can see by the significant sequential decline in 4Q that this was a very tough quarter. And you basically can tell by the numbers, Tesla tried really, really hard to meet the 4Q guidance, and also obviously to beat the 2023 1.8 million vehicle delivery record. Tesla missed that target by roughly 20,000 units, which is not very much, but when you look at these numbers, you can see they tried really, really hard, and the fact that they still couldn't make it gives you a sense of the intensity of the global automotive competition at the moment. Before we move on, I'd like to point out 2024 was also the year where we saw a series of profit warnings from all kinds of auto companies. For example, all the Germans, VW, BMW, and Mercedes all issued at least one profit warning in 2024. VW even issued more than one profit warning. So this gets us to the end of part 5. In the next part, we will be discussing vehicle production costs and various other items. See you in the next one. Bye.